I think the markets over the last week have really expressed a lot of optimism around what Washington has done. We've seen unlimited QE from the Fed. We've seen $2 trillion, being very close to passing the Senate and the House. I think the markets are now starting to look forward and realizing that everything that Washington is doing is certainly supportive of the economy and therefore supportive of the markets. But they're treating the symptom, not the cure, for lack of a better phrase. This is trying to treat an economy that is that's totally stalled out because people aren't leaving their homes. What's only really going to reinvigorate the economy right now is an actual slowing and stopping of the spread of this virus. So I think there's a little bit of kind of the optimistic view has now passed, and people are looking to kind of what is the new upside going past Washington's involvement.
I could understand if I was an investor waking up today, being a little confused, maybe even frustrated, seeing this 3-day rally where we've hit these new record numbers as far as the increases that we've seen from the lows that we had just hit days ago. But then waking up this morning and saying, well, now the futures are indicated down 500 points. Didn't we just get this relief package? I mean, if you're an investor, how are you supposed to make sense of this market from day to day when nothing fundamentally changed that much yesterday to today? We know the outbreak is continuing and the numbers are going to continue to get higher. So what are you supposed to do as an investor to make sense of the up days followed immediately by a very large down day?
Well, look, there's no doubt that this is an extremely volatile moment, and it really comes down to what the investors' objectives are. So, I think a lot of investors right now, have been, trying to wait this out, trying to kind of remain calm and stick to their investment plans. I think the investors that have been a little bit more aggressive on the risk-taking side are maybe looking at these up and down days as buying opportunities. We see a lot of investments out there that are still trading at pretty wide discounts to where they were a month ago. If you look at, pretty high-flying areas like the e-commerce space, like the social media space, like the video game space, they're trading at about a 15 to 25% discount. So there's certainly a lot of daily volatility. But I think longer-term investors that maybe have a little bit of capital on the sidelines to deploy are looking at some of these daily swings as buying opportunities to get into these long-term themes that have expressed a lot of price appreciation over the last few years.
Now, why video games? That's kind of an interesting one to me. What's the opportunity that you see there right now?
It's just one of the few things you can do at home. This is a longer term trend that people have been looking to, play interactive games on a console, on a PC, on their mobile phones. There's billions of gamers around the world, but, suddenly you've gotten rid of, actual sports. You've gotten rid of, going outside, going to restaurants. And people are looking to fill that time and fill that time, socially with friends online or with their family on their couch at home. So this is really concentrating a lot of that entertainment dollars that people would be spending in a wider range of areas into one specific segment. And we've actually seen revenue estimates for this industry increase during this entire crisis as there's just more and more money being spent on video games right now. So it's a rare bright spot that could be a beneficiary of everything. But it's, even despite those increased revenue expectations, it's trading at about a 10 to 15% discount from about a month ago.